Time now to introduce our personal finance guest, Hemant Rustagi of Wiseinvest Advisors joins in. Hi Hemant, good afternoon. The first tranche of the inflation-linked bonds are being launched today till the 31st of December, and these are open for the retail investors as well. So would you recommend them to your clients?
Well, I would say to begin with, I think these inflation index bonds are an important instrument for investors in India because one, they are expanding their investment universe because they're getting an opportunity to invest in something new. The second thing is that the coupon rate is linked to the CPI, not WPI, which is very, very important. Now, for example, if the CPI is 10%, they get 1.5% more than that, which means that they actually get an opportunity for the first time to be able to beat inflation without taking any risk. Now, this is important because hitherto, if they have to, give themselves a chance to beat inflation, they had to look at something like equity or equity-oriented instrument, which every investor was not very comfortable with. So I personally feel that these are definitely a good option for investors, but I think there are certain limitations and which have to be considered by any investor who wants to invest in that. One is that the interest that will be paid will be taxable. So clearly, for investors who are in the higher tax bracket of 20-30%, these bonds may not be a great option. Second is, investors may have to compromise on liquidity. That is for both for the principal amount as well as the return that they get. Now, there is an option that where investors can take out money after 3 years. We are talking about non-senior citizens, but they have to pay a heavy price. They have to, penalty is around 50% of the coupon rate that was paid in the previous year. So I think investors need to be very, very clear about their time horizon, and that too, they can redeem only at the coupon point. So which means that twice a year they can take out the money. The second thing is that the coupon or the interest that will be paid will be compounded. So all those investors who invest in fixed deposit, other instruments wherein they can get some regular income, they will not be able to get this here. So I think any investor, like I said, it's a good addition, but investors have to consider different options before making a decision whether to invest in these bonds or not.
All right, Hemant, unfortunately out of time on that issue. Thank you very much for that advice, though, because the bonds are open for subscription today. Well, we have to wind up markets and macros on that note.
MCX Stock Exchange, India's new stock exchange, presents Markets and